Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Tuesday, August 14th, 2018. It's about 11:30 Eastern Time as I'm starting this video. Let's just take a look at we'll take a look at the broad markets, gold, crude oil, maybe touch on Bitcoin, any commodities that stand out. So just some of the things I've been watching lately. Starting out here with the 60-minute chart of the SPY, the S&P 500 tracking ETF. These are the levels. I posted an update yesterday during the trading session showing two potential overhead resistance levels. And what those are is really just simply the gap that we had on Friday. We gapped down, so here's your gap. The bottom of the gap is natural resistance, and you can see that we've had a couple failed attempts there so far, and we'll just watch that. If we do pop into the gap, especially if we can print a 60-minute candle close, we'll probably backfill it. Most gaps once entered are usually backfilled, so that would bring us up to the top of the gap right here, that other line, and that would be our next logical resistance. So again, I've said this recently, I don't have a very strong conviction on the near-term direction of the market. I will add another level there. There's pretty well-defined resistance right there around 286, and that's also just a recent trading range. So here's a sideways trading range that broke to the downside with a gap. Here's another trading range that we have right now, so we'll see which way this resolves. I will say that based on the scope of the recent divergences, I'm still leaning towards a downside scenario, but again, my convictions aren't very strong at this point in time. So if we do reverse fail here at the bottom or the top of that gap, or even maybe that 286 level, I'd favor a move down here, at least back down to 279.45. Notable developments, we do have a bullish cross right now on the 60-minute PPO. Typically that is followed with some upside, not always. Here's a bullish cross. We had a little bounce, went back down, made a bearish, but then a bullish cross. That was a little whip. We call that a whipsaw signal. So then you got the next bullish cross over there. Actually, you know what? Those lines may have back tested. That may have been the bullish cross. That was a second test. Yeah, back test right here, and that led to that rally. So there's something to note. Keep in mind, we're also coming off oversold levels on the 60-minute chart. So again, this is not anything I would bet short right now on SPY. I have a short position on the Qs, but I've had that for a while, and I'm just holding tight on it right now because nothing has changed. But I don't have a strong enough conviction to put SPY or any broad market ETFs as official trade ideas on the site right now. QQQ 60-minute chart. Let's see. I believe I put up these levels yesterday, or this line right here. That's the top of the gap. There's Friday's gap down, so there's your gap right there. We already backfilled the gap on QQQ in reverse, so that gap has been backfilled, unlike the SPY. And you can see QQQ is simply in a sideways trading range right here, right now. And so we'll have to see which way this one breaks. You could flip a coin. I favor downside resolution, but again, I will start to respect anything that breaks the upside. I'll keep an eye on the SPY chart as well. But I'm slightly leaning towards a downside break. We could test the top of the range again for sure, but I'm leaning towards a downside break and more downside in this. And if not, then you want to watch if you are short or looking to short or go long and you're looking to buy a break above resistance. You have this previous reaction high. Here, I'm making a mess of this chart. Let's just use a horizontal line tool. There's a previous reaction high, and just above that, we had another reaction high from back here. So there's the next resistance zone if we happen to pop above there, and that would probably coincide with that uppermost resistance zone I just showed you on SPY. There's the negative divergence at the most recent high. There was a divergence at that high. So, it's simple wash, rinse, repeat stuff. Divergent highs, set up your swing shorts. Divergent lows, set up your swing longs. Trendline breaks, of course, are your buy and sell signals. Trendline breakouts or back tests. So there's QQQ. Let's look at the futures real quick, and then we'll move on to some other things here. Let's see. This is ES, the S&P 500 E-mini futures, and again, just a history of these, swinging these divergent highs and divergent lows. Divergent lows set up your rallies. That's where you want to go long for swing trade. Divergent highs set up either tell you to start, maybe tighten up your stops on longs, or get ready to short. And again, this is something I've covered ad nauseum in the past recently, so I'm not going to go over it. But that was our last divergent high with I shouldn't say last. We had a divergent high there, followed by a correction that ended with a divergent low. Surprise, surprise, and a rally, which terminated in again a divergent high. This time around, we traded sideways for a little bit in a very tight sideways trading range, a little consolidation. Once we broke down, there's your breakdown, came after the divergent high, and so far it's played out for a correction. But again, the thing is, with the scope of these divergences, they're pretty large. I would expect more downside, and that's why I'm leaning that way. So you can see resistance here on ES. If I take this line right here, it's already marked. The levels there, you'd have to zoom in on the video. 28.46.31 to be exact on that line. So give or take. That is resistance. And then of course you can see right there is a reaction where I'm starting this line. Come to the bottom of that trading zone, come over here. That's 28.52. Almost, we'll call that 28.53. So there's our resistance zone overhead that ideally should contain any pullbacks, or I'm sorry, contain any bounces on ES at this point, and maybe trigger the next wave down. If we take that out, that's bullish. And of course, if we take out these highs, then the only thing left over are the all-time highs, which we fell just shy of. I mean, the SPY, I was actually quite surprised that we came so close recently to taking out those highs from January in the S&P 500, but reversed. So there it is. If we break up and take out this support zone right here, we move up here, we'll probably punch through that and take out new high and go to new highs. That would be my guess. So if you are short the SPY, I would say you might want to cover if this support zone is taken out, especially on a 60-minute close, or if it's taken out. I should say resistance zone. I'm referring to these first two white lines overhead. And if they're taken out impulsively, we'll probably go on to take out that and then take out the previous highs on SPY. But I have to say this, it will still be a divergent high. It'll be a divergent high here on the 60-minute chart if it happens soon. It all depends on when it happens. Right now, the indicators are lagging. So there's room for a little upside to keep these divergences intact. And we look at the SPY daily chart. Let's not forget the bigger picture. Here it is. There's that previous high right there. I put the crosshairs. You can see the horizontal line. You can see how we fell just a hair shy so far. 1, 2, 3 days we were within striking distance of new highs in reverse. But we do have divergence, and I can show you that take away the big divergence from that big high back in January, we still have divergence from this point here, negative divergence, with the SPY making a new high as it backtests that trend line, that long-term trend line from below. Divergence there on the RSI and the PPO, and divergence here off those highs in January. So any new high will be a divergent high on the daily chart as well as the 60-minute chart if it happens soon. And I want to say this, for all intents and purposes, that was a divergent high. What I mean by that is, yes, technically did we make an equal or higher high? No, but we came within basis points, close enough. I think that was less than 1% within the previous highs, give or take. So looking at the bigger picture, that's close enough. And of course on QQQ, we already had divergence, and we already had a divergent high most recently right here at that high back on July 25th. And again, if we were to pop out, make a marginal new high soon, these divergences are still very much intact, these negative divergences. So I can just say this, I can see it as quite likely as a possibility that over the next week or so we pop to new highs, but I can promise you it's not a high that I'll be chasing. It's a high that I would put good odds on will fail shortly thereafter because of these divergences. But we'll see what happens. They certainly have the potential to be taken out and burned through, meaning negated. But as of now, they're intact. So let's see what happens. That's my thoughts. So again, I lean towards a near-term bearish scenario, but my convictions aren't very high on the broad markets. This is crude futures via CL, crude oil futures, I should say. Sorry about that. This one, it has just done a tremendous job, especially CL, but USO and some of the ETFs of trading to the technicals. There's been just some great swing trading ops. You can just go back and look at all these, you have trend line breaks, you have divergent highs that warn you of an impending correction. That was pointed out at the time. We broke down. Let me grab a different tool here. Bear with me one second. Um, Okay, there it is. I just want to grab a circle tool. All right, so yeah, divergent highs followed by a trend line break. There's your sell signal. Impulsive selling confirms the trend line break, and that was an important level. Divergent low, reverse, go long. Divergent high to resistance. Trend line break. Negative divergence here. This was our last. This was point in the trading room. Both of these ops to short there. Then I said the next shorting op would be on a break of the trend line. That came, and then boom, we had just a heck of a trade right down to support. You can see this support level was on that chart from before, had several tests. And then just yesterday, I pointed out we broke that support. But I posted right here. I saw a reversal. At the time, we had what I referred to as potential divergences because we had these indicators were pointing lower, and sure enough, they were confirmed. And we were right here at the time. We had just retaken this. That's a bullish technical event. When you break down below a well-watched, well-defined support level like this, but then snap back above it. And again, that's what I'm looking for in the Euro US dollar pair. Looking for that in gold, GDX, a gold mining stock. So that's why I've given that trade a little more rope. And so that happened yesterday. And even from that point, we rallied almost another 3%. That's a pretty nice run in very short order, 1 day or so in crude futures or USO, whatever you're trading. So good for a trade. But then look what happened. We put in at that point, we ran in, and again, all these lines were already on the chart. These are support and resistance lines. We stopped cold at that one. 68.13, and when we did, at that point we had negative divergence. And look, nice reversal off there so far. So you got to be quick on some of these trades, and this is why these don't make the front page. Front page, yeah, this technically was a swing trade on crude, although you could have day traded it yesterday, but these are very rapid swing trades, in and out, in and out. So again, pay attention. Even if you're a USO or DWT trader or any of those ETNs that track crude, I think you get a little better insight tracking crude futures. And again, you can get, even if you don't have a futures account, investing.com will give you free real-time quotes on all futures, including crude oil futures. And the CL is the symbol there. Okay, so where do we go now on crude, and what's the bigger picture? Well, let's look at USO because again, I know a lot of traders out there prefer the ETNs, and this is one of the more liquid. This is non-leveraged, so the chart will track crude better than the leveraged ones, which over time have the decay. So I like to use this as my trading proxy for oil if I'm using an ETN or charting proxy. And so you can see again, this is a yearly chart. I'm sorry, a daily chart, 2 years it spans. Well-defined uptrend line. We had a little false breakdown there, snap back above it, but then gave it up again. And I think it's still a valid trend line because once we broke down below, we backtested, and failed. And then again, this was pointed out in recent weeks. We set up with a minor trend line below the primary uptrend line, a secondary trend line there. We backtested and we've been moving lower. So bigger picture to me, and the fact that it came after a divergent high, this keeps me intermediate term to even possibly longer term bearish, at least intermediate term bearish on crude right now because of that divergent high. So far it's playing out. There was your negative divergence. The momentum indicators are still pointing lower. And right now we just recently broke below that minor trend line. So there's quite a bit of resistance overhead. I just showed you some of the resistance levels on CL. We'll look at those on the USO 60-minute chart. So here's the USO 60-minute chart. And again, even if you don't want to use the futures as a charting proxy, you can see those same divergent highs and lows. Here was bullish divergence at this point right here, falling wedge, breakout. We back tested at the same level, and when we put in that double bottom right there from these lows to these lows, we had, yes, positive divergence, and then boom, big rally. From there, big rally up. That ended with a divergent high, surprise, surprise, swung down, had a divergent low. Next uptrend, there's the uptrend line. Could have swung that. We had a breakdown and a back test of that trend line and then the minor trend line. And these levels roughly coincide with those same levels I was showing you on CL a minute ago. And there was your most recent breakdown. And here was yesterday, that divergent low that I pointed out in the trading room yesterday on CL. You can see it just as well on USO, and it led for a nice pop off that low. That was about try to grab the measuring tool, about almost a 4% pop in crude oil. So that's that. Maybe it's done. We ran into resistance on that CL chart, and I could actually put a resistance. We had a little gap right there, and I had a resistance line on USO already above there slightly. So that's that. So near term, not as sure right now. I think that we may have gotten all that we needed to get off that divergent low, but I'm not certain, and I can just tell you. So bigger picture, intermediate term, I'm bearish, but near term, I can tell you this: crude moves quickly, and I don't have those same negative divergences here that I have on the CL chart. But again, they've already played out. We had a small divergent high and showed you on CL, and that was so far good for a pullback in USO. So there it is. For now, I'm stepping aside. And in fact, yesterday's trade, I mentioned I didn't take that divergent low. I should have taken that trade in hindsight, but that's fine. There's hundreds of trades that I consider and pass on, and they pan out, and you get used to that after a while. But I did point it out for those that wanted to take it, or maybe those that were short crude, and pointed out that divergent low and the recovery of the break, that false breakdown of support, or the recovery of support once it was broken, and that would have been a good chance to cover your short positions there and avert a pretty big swift give back of about 3-4%. Okay, here's gold. This is one that I'm very closely monitoring. We have the GDX position, which I've given a little more room on the stops on the official trade. In yesterday's video, I updated the stops to a daily close today below yesterday's lows. I don't plan on modifying that, but if we come really close to today and I continue to see some potential bullish price action in gold, then I may extend that again. We'll see. Right now, we do have, if I zoom in here, this chart's not looking so hot when I zoom in. Yeah, but you can see a green candle right there. We had a big red candle yesterday, and that break below the 114-ish support level on gold, which was pretty significant. And you're not seeing any waterfall selling. You're not seeing follow-through selling today. You're not seeing a big day. So far, it's what we call an inside day, meaning today's candlestick is trading inside yesterday's. But it's a start, I can tell you that. Since we broke down, there's not been any follow-through today. Gold is up. It's been trading up throughout, I believe, throughout the trading session today. What do I see when I look at the 60-minute chart? Forget about all these other lines for a second. We had this trend line, and this is what I had on the most recent 60-minute chart. I had this trend line here. I pointed a breakout, and that might have even been when we went long the GDX trade. I can't recall exactly, somewhere in here, but we broke out, or maybe it was on the back test, and then we back tested. Again, I'm focused on this white line that I'm highlighting. We back tested. We started to move off, and we fell, but we caught it perfectly, and I have not modified that trend line. You can see it comes off this high back in mid-June. Lots of reactions on it. Then I have, if we zoom in here, I also had this yellow falling wedge type pattern. And one of my favorite patterns, or technical developments, I should say, in trading, and I don't know if this isn't in the books, it's just something that I've traded over the years. I call it a wedge overshoot or an overthrow. So you have, in this case, a bullish falling wedge. You can also get these with a bearish rising wedge. And what happens is prices, instead of breaking in the direction that you expect, meaning an upside breakout, prices all of a sudden impulsively smash through the wedge. But then, and here's the thing, if it will prove to be one of these wedge overshoots, they're pretty powerful, you need to see a pretty quick and swift reversal back into and almost immediately out of the wedge. That's been my experience. So that's what I'm looking for and hoping to see in gold this week. And again, if it's going to happen, it'll happen this week. And that's why I'm not going to, this GDX trade won't be on here much longer. It's either going to start to play out soon, or I'll pull the plug on it, at least officially. I might have made clear yesterday, I'm keeping my position probably throughout the week. We'll see, at least for a few more days. So when an official stop on the trades on the site aren't necessarily what I'm doing myself. There's some trades I believe in, and I might not have the most disciplined trading style. Normally I do. I have a trading plan I go in, but some trading plans I will adapt and modify if I see enough in the charts to do so, if I think the risk reward is there. So I'm willing to take a little bit more of a drawdown on that GDX short, because I think the upside potential, if the scenario that I'm talking about here plays out, is very, very big. So that's it. Work to be done. Don't know if we'll probably not have a resolution today unless they really started bidding gold up towards, in the last half of the session here. But you can also note this potential. We still have potential divergences in place. Bullish divergence. Want to see a bullish cross on this PPO, and I'm referring to the fact the indicators are making slightly higher lows, maybe equal lows on the RSI, but yet prices are definitely making lower lows. So there's your positive divergence on the 60-minute time frame of GLD. And then GDX will follow. Somebody asked me today, or they made mention, they didn't ask me, they said in the trading room, why is gold up, GDX down? That is perfectly normal. I mean, most days, if one's up, they're both up, but there's quite a few days one's down and the other's up. So one day doesn't make a trend. You just have these temporary disconnects between gold and GDX. But I promise you this: if gold reverses, puts in a bottom, and starts to move higher, GDX will follow. It's just a matter of, will it take a little while to catch up? Will it start following right away? So I'm not concerned. In fact, this means nothing to me today that GDX is down 0.2%. I'm more concerned with what gold's doing right now. I'm trying to get the bottom in gold right, you'll have the bottom in GDX, whether it follows immediately or not. And then here's where it was yesterday's lows were right here. So we're above yesterday's lows right now. There's our stop there around 1987. We're at 1994. Because that's where in yesterday's video, I revised the stop to a daily close below yesterday's lows. After yesterday's update on gold and GDX, I put in the comments section below. Actually, this one made it in the trading room. Remember, Get It Right mentioned the relationship between the Chinese yuan and the US dollar. And you can see this chart here. Very nice bearish rising wedge. We already broke down. This is a kickback rally. So there's a lot that I see in this chart that tells me we'll probably get a reversal soon. We have a lot of reactions there. So this is a well-defined resistance level right around 691 or so. We failed there once already, pulled back, then broke down from the steep, very steep bearish rising wedge. Usually the steeper the wedge, the more severe the reaction is once you get it on to the other side. So we had a breakdown and a kickback rally, which is normal. Looks like we're going in for a back test of this wedge, maybe a little bit above. We could slightly take that out. That wouldn't surprise me. Come in back test a little bit higher, a little fake out move, but you can see the negative divergences tell me it's just a matter of time before we get a reversal. And I think we'll come all the way back down here to about that 672-ish level. That would be an ideal target. Maybe a little bit above there, but at least a pretty good pullback I think is coming soon. And then a couple others that I put up were, of course, the yen and the US dollar. We have, this is the second largest component of the US dollar index. We have major resistance right here, a lot of reactions when you go to the left within this resistance zone. So far, we fell just shy of that. We had a divergent high there. You can see the negative divergence. We broke down below this trend line, and we're now under this resistance level right here, which was former support. And if we come up, we still have this trend line to contend with. And so what this chart tells you, if this plays out the way I think it will, this means the dollar will fall against the yen, which is the second largest component. A falling dollar is bullish for gold. So there's a case made on a second currency. And of course, we have the euro as the largest component in the US dollar index. And we have these pretty powerful divergences still yet to be confirmed, but they're in place. And I can tell you, we can fall quite a bit lower and those divergences will remain intact. I think we're going to have a pretty strong snapback rally when it comes. And the main thing, you want to see this level recovered right here, about the 115-ish, 115.5-ish level right there, because that was very well-defined support. And that's kind of triggered that big move down in gold once we broke it. So far down today on the euro US dollar pair, but again, gold is up, and that's the important thing. I think gold's anticipating this fake out, but we'll see. Like I said, there's still work to be done, and I'll keep you posted there. And then GDX on the daily chart, same story. GDX, it's really stretching the limits of this breakdown here. I can tell you that right now. I want to see a reversal. I'd like to see it sooner than later. I'd love to see a green close today in GDX. You don't always get what you want, but it will help the case. But sometime this week would be ideal. It could happen next week. Who knows? Anything's possible. Maybe even after that. But the sooner we can snap back and recover above 2112, the better. And the longer it takes, not so hot. Because if we move down a lot more, then at best you're probably looking for maybe a back test of the level and then a continued move lower. So like any trade, I won't become married to it. So far, I am giving it more rope than I usually do, but that's what I'm looking for, and I'll continue to monitor this one closely. All right, finally, let's wrap it up with Bitcoin. Bitcoin has it had a recent failed breakout. It had a lot of promise when it took out I think it was 7,100. I had it on a different chart, different drawing, but I've redone the chart here, or used a different charting program. This is investing.com. The other chart I believe I was using from Interactive Brokers. And you can see, it has a history of these divergent lows. You can see divergent highs and divergent lows. So this was a divergent high right up here, led to that top, followed by a big correction with strong bullish divergences at the lows right here. There's your divergences down below. Breakout, back test, and a rally that ended in a divergent high. I believe this one was pointed out at the time in Bitcoin broke down after from that below the trend line. There was your sell signal. We had a correction, and the correction didn't hold. I thought we'd hold on a back test of that 7,100. There were and here's some other support lines as well. Doesn't matter what I had back then. Here's some other support levels we need to see taken back. Now, where are we at now? I'll tell you, it doesn't look so bad. I don't want to say I've thrown in the towel and given up on this one. Actually, I need to draw that line a little higher. So here's a reaction low, previous low. That's a significant level. We have, as you can see, I've drawn here potential bullish divergence. We need to reverse soon, and your buy signal will come on a break of this downtrend line. It's not super well defined because I only have a few reactions on there, but it is a downtrend line worth watching in a wedge. And I think if it breaks out, that takes us up here to about 78, 71.50. You can see the levels marked there, possibly up here, maybe even more. We'll see. And the trading proxies for Bitcoin, there's a lot out there, but if you don't want to trade Bitcoin directly, we've had quite a few people trading Overstock recently. Overstock made a false breakout the other day, failed breakout right here. Looked like the real deal, and I'm referring to this trading range. You can see it's been in a sideways trading range for a while right there. Top of that range around 41.90 or so. So it popped and it ran right into that target I had up there. There's a pretty well-defined resistance level at about 48.18. You can see all the reactions from above and below. That's why that line was there. Hit that, reverse, fell back into the trading range and right back to the bottom. So I can say this, that is support, the bottom of that trading range. Other than this brief period where we had a false breakdown, we snapped back into the range. That has capped most of the pullbacks in Overstock since March. And so you have that. You have Bitcoin setting up. It doesn't have a buy signal yet, but it's setting up for a potential reversal. If you get a buy signal and Overstock and hold 32.40, well, you could swing it up, even a swing to the top of the trading range, even if we don't break out again, or not right away. You're talking a pretty nice move, about 30% up to the top of that trading range. So, well, worth it if you're, aggressive, and you take a, downsized position size, not anything too big. And then the other one, if you really want to strap the rockets on, is Riot blockchain. So we go to Riot. This one has a nice big divergent low, at least on the PPO, not on the RSI, but it was deeply oversold on the RSI. It's about as deeply oversold as it's been probably since this thing has gone public. So there was your divergent low. And the levels that I've been watching and trading off of on this one, I don't have any position right now, although I'm considering it. I'm warming up to it. 637, you can see support there. That's defined, capped all the pullbacks. Again, just like Overstock, we had one brief period where it dropped below there. So you have almost a comparable trading range, if you will, on Riot. And it was that same trading range right here when we had this flagging consolidation action where it broke out and ran. We've been in that trading range, and the bottom of that range, again, you can see the numbers there around 637, in the top of the range, because this one has a lot more juice in it. 960, that's about a 50% run up there. There's a midpoint in the range with some resistance around $8. It says 783, but I would right now say that's closer to $8, that midpoint of the range. So there's one at support. Trend indicators, this is above the zero line. There's really not much you can extract from the momentum indicators when they're flattening out, other than that the RSI is it's above that 50 level, or just on it right now, and the PPO right on the zero line. So again, this is a case of maybe take it at support here, especially if you start to see some bullish developments in Bitcoin, and then swing it up to any or all these targets, or possibly a breakout. I mean, if Bitcoin can get some traction and break out above its recent highs, then you'll probably see Riot and Overstock follow suit. So there's a potential trading up there. And we'll wrap it up here. This has been Randy Finney with Right Side of the Chart.